It's 5 a.m. in New York City. Good morning. I'm Danny Biggar with your Bloomberg Brief. Here's what you need to know this morning. The race for the Fed's top spot. President Trump's economic aide, Kevin Hassett, is said to be the front runner to replace Chair Powell next year. And it's the countdown to August 1st. The president says that tariffs on pharma and semis are coming soon. And bank earnings continue with Bank of America, Morgan Stanley, and Goldman Sachs after a record-setting quarter for their peers. So we had CPI a little under 24 hours ago. Did we learn anything from it? We're going to speak with Paul Donovan very shortly, who says the quality of the data itself is a problem. Even so, as the session wore on, we concentrated on things that seem to be impacted by tariff inflation. So stocks sank, and they sank again today, not to a huge amount, down less than 1/10 for your S&P futures session. Your NASDAQ, that underperforms after outperformance yesterday, thanks to Nvidia and AMD being able to sell more chips into China. Meanwhile, for your bond market, it was more pricing out of Fed cuts, nearing a 50-50% odds for a September cut. Little change this morning, some pain on the front end, higher by a basis point, but just want to flag the long end 30-year yields back above 5%. Let's now get you some stocks to watch. Are moving in the pre-market. With that is Valerie Teitel. Hey, Val.
Hey, Danny, I wanted to start with a check on the pharma market to see how those stocks are coming off due to those recent threats from President Donald Trump that those pharma tariffs could be coming in around August 1st. But we are a bit mixed on the pharma picture. We do have some stocks to the downside, Eli Lilly, but some outperformance when it comes to Pfizer and Johnson & Johnson. We do get Johnson & Johnson reporting before the bell, so maybe some more color in their earnings reports. Let's move on to tech over in Europe. ASML to the downside, dropping some 7%. This is after they cut their earnings forecast for 2026 on the back of the uncertainty around tariffs. It's dragging down the whole chip sector in Europe, the worst performing sector so far this morning. Let's end with what we are due to hear before the bell, and those are those bank earnings that you talked about, Danny. We do have Goldman Sachs, Morgan Stanley, and Bank of America. Will they look like what their peers looked like yesterday with the JP Morgan coming out with beats across the board in equity trading, fixed income trading, and investment banking revenue? Are we due to see those kind of beats so far this morning? Danny.
A fantastic roundup, Val. We'll catch up with you later in the hour. Also in this hour, joining us shortly will be Paul Donovan of UBS to give us his read on the most recent reads of data in the impact of tariffs. Tallbacken's Michael Purves will discuss the risk landscape, and we'll look ahead to the rest of the Wall Street earnings with Biggar of Argus. Now, the latest U.S. CPI data did show inflation rising less than expected for a fifth month in June, despite signals that companies are starting to pass on tariff-related costs to consumers. Paul Donovan, chief economist at UBS Global Wealth Management, says, quote, U.S. June consumer price inflation gave some troubling signals about the data quality. Not only are fewer prices being measured, there is circumstantial evidence that budget cuts mean more prices are being guessed. And I'm pleased to say that Paul joins us now this morning. So, Paul, what do you do with the data when the quality of it is questionable?
Well, this has always been a problem with economic data. We've seen declining quality in recent years, but we have seen the U.S. Bureau of Labor Statistics, for example, just give up measuring prices in certain cities over the last couple of months because they don't have the resources to do that. And what we've seen in this data is that they're having to use more and more guesswork to come up with prices, again, because they don't have the people to measure. So we've got a general sense of the trends, but we've perhaps got to be a little bit careful about putting too much reliance on precision coming out of the CPI numbers.
Well, as you hinted at there, Paul, in that quote we read from you, it seems like it will get worse if there are budget cuts and there are less people working on this and less resources. So does that mean the quality continues to decline? And when does that run into a real issue when we judge the data not only to make market decisions, but for central bankers trying to decide where policy goes from here?
Well, central bankers have already got a problem with the broader data quality issue. We know that there are a lot more revisions to data. We know that data revisions are larger. We know there's a bias. We tend to underestimate economic activity in real time. So you've seen, for example, in the UK, the Office for National Statistics sort of suspend publication because they say the data quality is too bad. The issue we have, say, with the United States is that the data quality is just as bad, but they publish anyway. So you get a misleading picture. What we have got, I think, is a broad sense of where the economy is. We can get that from using a wide range of data sources. But if you've got a mathematical model that depends on whether I don't know, unemployment is 4.5 or 4.6, yeah, give up on that model because it's not going to work.
Well, let's try to dig through the data that we do have, Paul, and what we can look at. What is your understanding to the degree that companies are absorbing prices, taking a hit to tariffs versus passing it on to the consumer, and what that means as more of the tariff impact starts to bite later on this year and next?
Yeah, so Dan, it's important to recognize that in the June consumer price inflation data we've just had, only about half of the current tariff effects are actually there. And that's because tariffs don't apply to goods that are already en route. So a lot of product that was arriving in the United States in May was not subject to tariff, because it was already on its way when the tariffs were imposed, and you get a free pass if that's the case. So there's still quite a lot of tariff effects which are going to be coming through in subsequent months which aren't actually there. And then, of course, we also saw companies front-loading, buying in advance of tariffs, stockpiling, and so we're still selling goods which are not subject to tariff. But where we have sort of shorter supply chains, where things are coming through a little bit more quickly, there we are seeing the effect of tariffs. So across the world, for example, appliances, so washing machines and fridges and so on, they're tending to come down in price. They're falling in Canada, they're falling in price in the UK, in Europe, in Mexico. They're rising in the United States, and they've only been rising since March. And in fact, we just had the biggest increase month on month in appliance prices this century in the United States. That's a pretty clear signal that the consumer tax is being passed on to the end consumer by companies, and that the cost of the tariff is being borne ultimately by the US retail consumer.
If that is the case, Paul, very visible type products, if we are in this regime again where things like washing machines are starting to become more expensive, is it your understanding that things like that exert enough political pressure to pull Trump back from the most extreme tariffs if it is a market that isn't doing the work of that right now?
So this is the issue, because consumers are plagued by something economists call frequency bias. You remember the price of the Snickers bar you buy every day, and you notice if that price changes. But, what was the price of the last washing machine you bought? I mean, that could have been 5 years, 10 years ago. And so you don't remember the price, you don't notice the price change so much. So where consumers tend to be sensitive, really sensitive politically to prices, is food and fuel, which, of course, was one of the issues that President Biden was struggling with, where food prices in particular were rising. Now, the tariffs are something which is likely to raise the cost of living fairly significantly. It will raise the cost of less frequent purchases in the United States. It's not going to have so much of an impact on food and fuel prices. It will have some impact, but it's a bigger impact on the things we buy less frequently. So one of the issues here is that the political pressure may not be as great, because the things we buy frequently are less subject to tariff in the United States.
Let me just say, Paul, I wish I ate a Snickers bar every day and could do that. That sounds like a wonderful life. Speaking of political pressure, we have some reporting that it seems like Kevin Hassett is now sitting in pole position for potentially the next Fed chair. How do you judge the Kevins, as it were, specifically Kevin Hassett, if he does take over as the Fed chair? He's been very vocal alongside Trump, saying that rates should be cut, and the current Fed chair, Powell, has been too partisan.
Well, I wouldn't speculate on any individual name at this stage. President Trump has a history of perhaps offering surprises when it comes to policy. There's a certain erratic quality to his policy decision-making, keeping everybody guessing until the last minute. When it comes to the Fed chair, I think that we've actually got three options. Somebody completely independent, markets will love that. Somebody completely politically controlled by Trump, I actually think markets would react quite well to that, because what would happen is if you get a complete political stooge coming into the Fed, the FOMC will just ignore them. And the Fed chair will become irrelevant, and you would still get then an independent policy. The worst case scenario for me would be sort of the equivalent of Nixon's Fed chair, Burns. And Arthur Burns was somebody who appeared to be sort of politically independent. But when you look at the Fed minutes from the time, he was basically parroting what Nixon had told him to say. And so the Fed wasn't able to defy him because he didn't appear to be a political stooge, but in actual fact, he was very subject to political influence. So an Arthur Burns equivalent, I think, would probably be the most damaging Fed chair that we could get.
Paul, that is such an interesting point, and kind of echoing what Neil Dutta said, if you get a political appointee who's very blatantly so, you might just get a chair in name only. Paul, we're going to have to leave it there. It is always wonderful to have you all. Paul Donovan of UBS Global Wealth Management. Now let's get you some other top stories that are trending on the terminal this morning. Paul mentioned this. UK inflation had come in hotter than expected in June, rising to its highest level since January of 2024. Headline CPI picked up to 3.6%. Food prices rose 4.4%. Retailers blame recent increases in payroll taxes and minimum wage. ASML shares, they are down this morning, nearly 8%. The chip equipment maker struck a cautious tone on its outlook for the next year. Tariffs are muddying forward guidance despite positive performance. Its CFO did say that lifting chip controls on China would boost demand. In the meantime, the owner of Cartier, Van Cleef, and Arpels reported higher sales. Sales at Richemont's jewelry division surged 11% in the quarter ending in June. So everyone's still out there buying jewelry. Guess that's good news. Coming up, President Trump says pharma tariffs could come by August 1st. We're going to have more on the latest negotiations. That's coming up next. Stay with us on your Bloomberg Brief.
Pharmaceuticals will be tariffed probably at the end of the month, and we're going to start off with a low tariff and give the pharmaceutical companies a year or so to build, and then we're going to make it a very high tariff.
President Trump speaking yesterday on pharmaceutical tariffs. For more on where we stand in the negotiations on trade, Bloomberg's Brendan Murray joins us now, who leads our global trade coverage. Brendan, it is the sector tariffs that we had been waiting for. Where do we stand on likely pharmaceutical tariffs?
Yeah, exactly. So it's a pretty predictable strategy now from President Trump to throw out a threat like this of a tariff, in this case on pharmaceuticals. He made it recently, but he suggested that it wasn't going to come for another year or two. But this latest threat, it comes in the middle of negotiations he's having with the European Union and with India. Neither one of those deals are done yet. So it's just a reminder to those countries where pharmaceuticals, where their exports to the U.S. really matter, that he's got these other tools that he's willing to throw into the mix to gain leverage on them during these negotiations.
We did have another deal take shape, and a confirmation of it this morning that Indonesia would face a 19% tariff rate. Brendan, this does feel to be more comprehensive than other deals we've gotten, and Indonesia, in return, for example, is buying Boeing jets. What does this tell us about the trajectory of where things are going as we approach that August 1st deadline?
Well, I think the first thing it tells us is that something in the neighborhood of 20% is where these tariffs, at least for Southeast Asian exporters, is coming into focus, particularly on the heels of the Vietnam deal that came in at 20% as well. So it seems like 20 is the new 10. If you thought you were going to get 10, you're probably more likely to get something in the neighborhood of 20. Now, that will matter to countries that are facing upwards of 30 or 40% tariffs in the reciprocal tariff threat that President Trump has put out there. So 20 sounds a lot better than 30 or 40, but it seems like that's where the negotiating agreements are going to come center around, at least for those countries in Asia that are worried about their export sectors getting hit with the punishing sky-high tariffs that President Trump has initially threatened.
Even so, if you have a situation where countries like Indonesia and Vietnam have lower tariff rates than China, Brendan, is there not still this desire then for companies to simply reroute trade through China? I know Trump has talked about transshipment tariffs. Do we understand how that would actually work, and whether it would in impact affect and influence buyers not to do that kind of trade route?
Yeah, I think what it really introduces is, and we've talked to importers and shippers dealing with this this new regime, this new tariff regime, is that it just really complicates the whole system. And if you're trying to figure out where to reroute your supply chains, it makes that task. If you're able to do it, it creates so much paperwork and so much extra costs. So I think until we see where all these other individual tariff rates settle, then it's going. Then companies will have more certainty. But until then, we're looking at at least 3 more weeks, if not longer, of trying to decipher how the new global trading system is going to be wired along with these new U.S. tariffs.
Brendan, thank you for your help in trying to decipher it. I'm sure we'll do this same place, same time tomorrow morning. Brendan Murray, thank you so much. Coming up, House Speaker Mike Johnson breaks with President Trump over the Epstein files. More on this and what else is making headlines around the world in the top papers. That's coming up next. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news. What's making headlines on the world's top publications? First up on the Journal, New York City mayoral candidate Zohran Mamdani has met with the city's most powerful business executives. During the meeting, Mamdani said that he would discourage the use of the phrase globalize the intifada, but said that he wouldn't discourage the idea of the protest behind it. Michael Bloomberg, who has endorsed mayoral candidate Andrew Cuomo, is founder and majority owner of Bloomberg LP, the parent company of Bloomberg TV. Next up on the Washington Post, Speaker Mike Johnson calling for the release of the Epstein files amid backlash. It comes just days after the Justice Department said the matter was effectively closed. Johnson is a close Trump ally, and this is one of the first major breaks he's had with Trump publicly on an issue. And on the New York Times, U.S. Vice President J.D. Vance had cast a tie-breaking vote to advance $9 billion in DOGE cuts. The Senate voted to take up legislation to claw back funds for foreign aid and public broadcasting. The rescissions bill is a top priority for the Trump administration. Now, staying in D.C., National Economic Council Director Kevin Hassett is in pole position in the race to be President Trump's next Fed chair. For more on this story and others, let's bring in Bloomberg senior editor Bill Ferry. So, Bill, it was a race between the Kevins, and it seems like one Kevin might reign supreme.
Yeah, that's right. Treasury Secretary Scott Bessent saying that basically the formal process for picking the next Fed chair is underway. And it looks like from our reporting that Kevin Hassett, the head of the National Economic Council, is in that pole position right now. He has been a longtime Trump economic aide, basically going back the better part of a decade. And his main competition looks to be Kevin Warsh, the former Fed governor, who has also been a longtime Trump supporter, but certainly doesn't get as much face time as Hassett does with his office there in the White House, right there in the West Wing, and his ability to jump in and advise Trump on economic matters. Now, of course, Scott Bessent has also been on that short list. President Trump was asked about his potential candidacy and basically said that he likes the job that Bessent is doing at Treasury, and that the Treasury Secretary is probably not the #1 pick right now. But we know with President Trump, his mind can shift quickly, and they have really several more months before they really have to make this decision.
We were just speaking with Paul Donovan of UBS, who said an outright political appointee the market would like because they'd become a Fed chair in name only. Bill, some of these candidates, specifically Kevin Hassett, what do we know about how they might try to guide the Fed, to guide the FOMC, should they be the chair next year?
Well, we know that Hassett has basically echoed a lot of President Trump's complaints about Jay Powell. You know, the president even saying that he thinks interest rates should be multiple points lower at this point than they currently are. And Hassett suggesting that perhaps Fed cuts last year ahead of the election had some political bias in them, given that the Fed hasn't really resumed cutting this year. So He knows how to talk Trump. He has really taken on, I think at one point he was seen as a more of a moderate conservative economist, but he has really taken on the kind of the MAGA talk, the Trump talk that I think, frankly, is endearing to the president and will help you maintain his ear. So I think that's really part of what the backing is here. But the markets will question whether any decision made either by Powell now while he still has time or by the next Fed chair are really independent decisions or made under the pressure of the president.
Bill, just before we let you go, it is so-called crypto week in Washington, D.C. That's seen Bitcoin surge to new highs. What is the latest there? What sort of legislation might we be getting?
Well, it looks like this is crypto week in Washington, as you mentioned, and there was some delay in getting some of the initial rules passed to allow legislation to come up in the House. President Trump said that's going forward. This has been legislation long sought by the industry. It would include switching some of the oversight, regulatory oversight of the crypto industry from the SEC to the CFTC. That's seen as a more friendly place for the industry. And it would also require a dollar-for-dollar backing of some of these stable coins. So those are some key issues that basically crypto backers believe will help more widespread adoption. And it looks like some of that legislation will likely get through this week.
Bill, thank you so much for that. That is Bloomberg's Bill Ferries. Coming up on the show, earnings season is in full swing. We're going to catch up with Michael Purves of Tallbacken on C-suite confidence despite the market uncertainty. That's coming up next. Stay with us on your Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. The race for the Fed's top spot. President Trump's economic aide, Kevin Hassett, is said to be the frontrunner to replace Chair Powell next year. Countdown to August 1st. The president says tariffs on pharma and semis are coming soon. And bank earnings continue. Bank of America, Morgan Stanley, and Goldman Sachs report after a record-setting quarter for their peers. So we had bank earnings, we had CPI yesterday. What did we learn from it? The bank said the economy is good. CPI below expectations, but did turn for this market to focus more on some of the tariff impacts. So we're looking at a second consecutive day of losses. Should this stick? The Nasdaq underperforms, down 0.3% after outperforming yesterday. For this bond market, it is a bit more calm, but it was mostly losses yesterday. Little change for both the front end and 10-year yields as we back off the odds for a rate cut after the CPI data. It is notable that 30-year yields are still holding above 5%, moving back above that level yesterday. Let's get you some stocks that are moving in the pre-market now. With that is Valerie Teitel. Hey, Val.
Hey, Danny, good morning. Let's start in the pharma sector because there's really not a clear reaction to the recent threat from President Donald Trump that those tariffs could be in before the month is over. We are a mixed picture. Maybe it's just showing a desensitization to these tariff threats. Remember, though, we do get Johnson & Johnson earnings before the bell this morning. Maybe some further color on how they're thinking about the tariff picture there. Let's move on to the tech space. Trump did also threaten tariffs on semiconductors. We did have ASML reporting this morning in Europe out of the Netherlands to the downside, down some 8% so far this morning. They backtracked on their 2026 growth outlook due to uncertainty around tariffs, and this is dragging down the tech space globally. Maybe one of the reasons why NASDAQ is underperforming so far this morning. Lastly, let's check in on the banks. It's Wall Street reporting round two this morning. We do get Goldman Sachs, Morgan Stanley, Bank of America. JP Morgan results yesterday did show it's quite a high bar. They had beats across the board, but the stock still ended up in the red. With Goldman Sachs and Morgan Stanley, those share prices are hovering around record highs. Seems to be a high bar for this earnings season for the banks. Danny.
Certainly does. Valerie, thank you very much. And we'll have more coverage of those bank earnings coming up in the program. But more on overall earnings so far. Michael Purves of Tallbacken weighing in on the resilience of corporate America, writing, quote, for all the stretched valuations, it's notable that capex estimates have increased dramatically. It speaks to a certain type of C-suite confidence about the future, which we would have not expected given the policy uncertainty. Michael joins us now. He is founder and CEO of Tallbacken Capital Advisors. Michael, what do you make of that confidence? What underpins it at a moment when we are still trying to figure out both the economic outlook and the policy outlook?
I think it's fascinating. And to be honest, I was really surprised by how much capex estimates have continued to grow. And when I talk about capex estimates, I'm just talking about bottoms-up consensus estimates compiled by Bloomberg there. But you can look at it across a variety of indices or individual stocks or sectors. And for all of this policy uncertainty, right, you would think if there's a lot of policy uncertainty about tariffs and everything else that you would not see, basically a resilient fixed asset growth trajectory. Just wouldn't. If corporations, one would think, would be much more mindful and sort of being very cautious and so forth. But in fact, if you look at it, like just for the SPX market cap weighted index, it's up 10% year to date. If you go back through, any sort of 6-month window, any, sort of first half, second half, going back a decade, that's one of the best halves we've had. Now, a lot of that is AI related. So if you look at Mag 6 or Mag 7, that's up 23, 24% year to date. That's really kind of driving the bus. But even if you look at the Russell value indices or, for example, the SPX equal weight indices, which are much more sort of cyclical value type compositions, those are up 4 or 5%, which for those indices is still, sort of above their 10-year mean in terms of, how much those grow in a 6-month period. So I think this really gets back to this concept that the C-suite is sort of seeing through all the tariff chaos right now, and they're committing to these capex plans.
I was going to ask, and you kind of answered the question for me, Michael, just how much of this is about hyperscalers, how much of this is about AI. If it's not all that, but the bulk of it is, do we get back to this place where we started at the beginning of 2025 to say this is a concentrated market that's vulnerable to pullbacks?
Well, yeah. I mean, in terms of, look, there's no question that the Mag 6 really carry the water for the broader market. They also carry, if you look at the SPX market cap weighted index, which is, the most people's benchmarks, those guys carry the water, not just in terms of stock price performance, but also in terms of sort of the quantity and also the quality of earnings growth, right? And so when I see those companies, really increasing, their capex estimates, and maybe there's some tariff-related inflation embedded in those higher numbers, but still, they're sort of saying full steam ahead there. And I think that also sort of resonates with basically a sense that if they're willing to do that and also ultimately dent their, typically amazing balance sheets by doing so, they have a lot of confidence that the AI boom is going to translate into long-term, much higher earnings growth there. And I think that also kind of resonates with investors there. So that's also ultimately going to come back to that. And look, I think for the broader market, for the SPX, I think if, you really need to think about being long those big tech names. Fundamentally, they've had the biggest PE compression year to date and the biggest earnings expansion. They've actually, once again, sort of, run laps around their cyclical counterparts.
Michael, you do point out in your research, though, in your notes to clients, that there is a divergence between technical and fundamentals, that the technical is bullish, but fundamentals are scary. What's scaring you about the fundamentals at the moment, and which of those two forces ultimately wins out?
Yeah, well, it's been amazing. I had been tactically bearish through the winter and early spring. I, was sort of there to 4,800 back in April during that volatility. I expected a relief rally to 52, 5,300, 5,400. I frankly have been kind of shocked by how resilient this rally has been, and I think a lot of it has been sort of flow driven. The first leg was sort of, sort of glorified relief rally, and then there was a lot of retail pushing it higher. Right now with fresh highs, right, and we're up year to date on the on the SPX and a lot of other indices. Now we have sort of what I would call institutional FOMO kicking in. So you almost have a November, December kind of beta chase, and that means people have to allocate to this market whether they like it or not, right? There'll be pressure to do so, just the way they do in November, December. If the market's had a good year, people have been under allocated there. So I think that also helps push the technicals higher. But to your question about fundamentals, yes, here we are north of 22 times earnings. There's a lot of reasons to think that there will be some margin compression over the next 12 to 18 months across a lot of sectors, some more than others there. And then there's a broader question about where should valuations ultimately go if the 10-year is going to keep going. If it does go through 4.5% and head up to 5%, and the 30-year stays above 5%, that raises a lot of longer-term asset allocation questions there. So I think there's a lot of tension around the corner fundamentally, as ultimately the whatever momentum is here is very, very strong, and you have to be honest about that there. But ultimately, the market will be a weighing machine, and fundamentals will bear out. If the companies can really not just the Bag Six, but all of them can really produce exceptional earnings growth over the next 12 months, then the valuations will be validated. But if they slip, then there's going to be a hangover here later in the year.
So maybe a melt up for now, but some things to look, maybe not forward to, but to look out for later in the year. Michael, we're going to have to end it there. Thank you so much for joining us early this morning. Michael Purves of Tallbacken Capital Advisors. Let's now get you some other stories that are trending on the terminal this morning. The Trump administration finalizing an executive order to allow 401k retirement savings plans to invest in private equity. Sources say the president could sign the directive soon. Details, though, are still being discussed. The move would be a major win for the industry, which has been lobbying to secure a piece of the roughly $12.5 trillion held in 401ks. ASML shares, they are down sharply this morning, down nearly 8%. The chip equipment maker struck a cautious tone on its outlook for next year. Tariffs are muddying forward guidance despite positive performance. Its CFO did say, however, that lifting chip controls on China would boost demand. And in the UK, inflation coming in hotter than expected in June. It rose to its highest level since Jan of 2024. Headline CPI picked up to 3.6%, food prices up to 4.4%. Retailers blame recent increases in payroll taxes and minimum wages. Coming up, Goldman Sachs, Morgan Stanley, and Bank of America earnings are on deck. Stephen Biggar of Argus Research tells us what he's watching out for next. This is Bloomberg.
When you look across the 5 key businesses that we have across the company, whether it's wealth management, commercial bank, corporate investment bank, and the consumer businesses, there's opportunity for all of them to grow. I think you may see a little bit of that growth come first in some of the markets businesses, because that's where you see that pent up demand.
That was Wells Fargo CFO Michael Santomassimo speaking on Bloomberg yesterday. And we get another round in the last of the big Wall Street reporting today with Goldman Sachs, Morgan Stanley, Bank of America. Earnings are also on deck. Stephen Biggar, Director of Financial Institutions Research at Argus Research, said that he believes that, quote, recent upward re-rating among analysts is justified in light of improving capital returns and better capital markets and regulatory backdrops. Stephen joins us now. So, Stephen, just before this earnings season, we had started to see new highs on the KBW Bank Index. From what you heard yesterday, does it justify that run up in prices?
Oh, I think so. And good morning, Danny. I think this upward re-rating has been, really several functions or factors that have helped. And, certainly the macro environment, if you look back a quarter ago, we had the Liberation Day tariffs, and a lot of the conversation then on the conference calls was the big pause in activity for capital markets, in particular, investment banking, M&A activity, all on pause. So that's changed. And we also have a much better regulatory environment. So the Trump administration's new person for vice chair of supervision at the Fed, Michelle Bowman, has been very constructive on comments about the lowering the guidelines for capital at large for banks. So that's a big tailwind, I think, that really hasn't been factored in yet. And then, of course, as the quarter went by, you had a much better capital markets environment. The conversations being much more constructive, is what we're hearing from bank managements, and that's kind of been the one missing piece to the earnings puzzle for banks so far this year.
If we just stick on that deal-making piece, Stephen, it was, for example, from J.P. Morgan, a surprise uptick in their investment banking. Do you get the sense that even if we don't get clarity on things like where trade is, where interest rates go, that it is an environment where companies and deal makers are just going to look through it and get deals done, allowing capital markets to stay robust at some of these banks?
Well, I think that can happen. The flywheel probably will not, spool up as fast as it otherwise would if we had better clarity. But a lot of these deals get done, and no matter what the environment, we have, companies that are looking for capital, that want to grow, that are in a great space. Even the IPO environment, sometimes the smaller and mid-cap companies will like to come public. And we have had some better activity there as well, with particularly some of the larger IPOs that have come to market and gotten some good traction, like CoreWeave and Coinbase, names like that. So it's really I would say a function of management's hunkering down and saying, how long do we want to wait this out and not get our growth capital? So there tends to be always some opportunities. And I think that's what people are looking for in the second half of the year. By the way, a lower rate environment, which is a much debated aspect right now, I think is also another tailwind that could propel the investment banking side.
It is remarkable because you have investment banking showing up in a way that we didn't think it would at this point. The consumer too, Stephen, looking at some of these figures, JP Morgan credit card spending rose 7%. Citigroup spending on its branded cards rose 4%. What does that tell you about where the consumer is and for what more of these consumer type exposed banks like Bank of America, which we'll get today, where their trajectory is?
Well, the narrative has been of a much more resilient consumer than anybody really expected. So you're right. At the national level, we get very good weekly stats, of course, from the Federal Reserve, looking at 3% year-over-year loan growth for both commercial, industrial, and consumer. A bank like J.P. Morgan reported 5% growth yesterday, and a lot of that was, because of the consumer and the dominance in credit cards and so forth. So that's really been, a help for the banks at this point. To have that consumer be so resilient going into this environment. They have shrugged off a lot of this, whether it's the inflation, the tariff narrative. There may have been some pull forward in terms of auto lend because of the tariffs, people expecting maybe the price of new cars getting more expensive and buying in April and May before tariffs really kicked in. So I don't think that is necessarily a one-off, and it seems like loan growth is on a pretty good trajectory here, particularly for the consumer.
So we're still waiting for the rest of the earnings, Stephen, but just at this point, what are your favorite names within this sector?
Well, we still like the large banks because they do have that catalyst for capital markets recovery. So names like J.P. Morgan, Morgan Stanley, Goldman Sachs, Bank of America, even Citi had a good quarter yesterday. They are low on the return on equity scale than the other banks, but making progress there. But even they raised revenue guidance based again on loan growth and credit cards, a little better investment banking environment, and new mandates in the services segment. So these banks, I think, are all kind of in the sweet spot. I would say running on 7 of 8 cylinders at this point, and you just get a little bit better spool up in investment banking. I think the earnings and return on equity.
Just if I can jump up, is there anything you don't like then in this sector at this moment? You sound pretty positive across the board.
Well, on the large banks, yes, they do have a lot of tailwinds, and to add, by the way, that the regulatory side, they would be the major beneficiaries of that lower capital requirements. So some of the regionals are struggling here. They are losing share to the big banks. And we covered. I think we have a coverage bias. Honestly, we're only covering the regionals that have good prospects. Even names like PNC, Truist, M&T Bank also reporting today. They're in kind of good service territories and so forth. So the banks that are struggling tend not to be on our coverage universe.
All right, Stephen, fair enough. Thank you so much for joining us. We'll see what those earnings bring later this morning. Stephen Biggar of Argus Research. Coming up, Nvidia CEO Jensen Huang tells Bloomberg it will be harder to recover from H20 write-offs. More on his comment as the CEO of Nvidia travels to China. This is Bloomberg. This is your Bloomberg Brief. I'm Danny Berger in New York. Nvidia CEO Jensen Huang is in Beijing after the semis giant gained approvals from the U.S. to send its H20 chips to China. Huang commented to reporters on his attempts to mitigate losses after President Trump had earlier this year blocked the sales of the chip model.
Some of the things that we wrote off might be harder to recover, but most of the things that we put on reserve will not be scrapped permanently, was not scrapped permanently. And so we'll compare what customers would like to buy now versus the inventory that we have, and then we can figure that out. It's probably not 100%, but it's not 0% either. Tariffs, the world is reconfiguring itself, and we are a company, and we have to adapt to whatever the world's trade and tax and tariff conditions are. There were trade, taxes, and tariffs before I came into Nvidia. There will be trade, tariffs, and taxes after I leave Nvidia. And so this is something we all have to adapt to. But the very incredible thing is, Nvidia is a very adaptable company. Our supply chain will have to adapt, and we will find a new way. Okay, so in the long term, it always comes back to this. Do you make products and technologies that are important to the world? Are you building things with great craft and care that customer deliver and receive benefits? And are you doing something that really impacts the world? And if those things are true, everything else will solve itself.
Nvidia CEO Jensen Huang talking about changing supply chains and tariffs. The one thing that remains constant are his awesome leather jackets. Now let's get you set up for your day and what to expect. We're going to complete this quarter set of big bank earnings. Bank of America, Morgan Stanley, Goldman Sachs, they'll be posting their results before the market open in just about an hour's time. U.S. PPI data, that also comes in a few hours' time, 8:30 a.m. Eastern. That follows yesterday's CPI update. We'll also get the Fed's beige book. That comes out today at 2 p.m. Now, some individual movers this morning. Blackstone, one of the companies we are keeping an eye on, up more than 1%. Announced over $25 billion worth of an investment in Pennsylvania's digital and energy infrastructure. Bright House Financial up 3.4%, just there's about. There was a report from the Journal that it is in sale talks with Aquarian. Johnson & Johnson also not moving much, but it is going to be reporting before the bell. We might get some extra focus on that one just because we heard from the president recently that pharma tariffs likely are going to come at the start of August. Now, again, we're going to get the rest of the big bank movers this morning. Here's just a view on how they are trading, a little bit weaker to unchanged. We did see bank stocks in general. The KB banking index fell yesterday, despite some really solid results from JP Morgan. Citi, though, that was the one that shined. It beat on expectations, giving more capital back to shareholders. So we'll see what these results bring. We are expecting them to hit at 7:45 and then another batch at 7:30. Okay, that's it for Bloomberg Brief. Surveillance, that's up ahead next. They'll walk you through those bank earnings. This is Bloomberg.